Good afternoon, ladies and gentlemen. Welcome to the webinar for today on how to identify the right jurisdiction for your startup. We have a great bunch of speakers today, and I'm sure you all will be enthralled by the discussion and the quality of inputs. We, of course, look forward to having it as interactive as possible. And all the question answers will be left for the end. The Q&A will be left for the end. So all of you are invited to, put your questions on the chat box and help us make it as interactive as possible, as I said. With that, I'm going to first invite Mr. UN Marwa, Chairman of RNM India, to give his welcome address. Over to you, Mr. Marwa.
I extend all of you a warm welcome on this panel discussion of how to identify the right jurisdiction for your startup, which is being organized by RNM India. RNM is a consultancy firm which is over 75 years, spanning into 3 generations. And currently we have our branches in Gurgaon, Bangalore, Raipur, and London. London was our latest, which we started this year itself. As you know, that the world is now becoming all one, and area of business opportunities is increasing. So everybody is always thinking of where to set up a jurisdiction, where to set up the business, becomes an important factor to consider. And each one has their own preferences, whether it's family, location, economic. However, there are situations which are more the state meets the requirements of everybody. So one needs to decide where to start a business. Before we begin the seminar, I would like to introduce and convey my gratitude to all the panelists who have joined us to share their experience and expertise. Welcome, Neil. Neil has 15 years of experience in product development, business development, and market operations. Previously, he was a senior management position in organizations like Applied Mobile Labs, CEO of AML, the business that he grew for more than 100%, and doubled the client base, won award at the Mobile World Conference, and pivoted towards a data-driven marketing automation platform. I welcome Sandeep. Sandeep Vora is an accomplished business manager with 18 years of experience in delivering solutions to international businesses across travel, information technology, and the insurance industry. Over the years, he's developed extensive experience in delivering high dollar value solutions, strategic planning, process optimization of critical projects across various countries and emerging markets. Welcome, Sumit. Sumit has 15 years of experience in direct taxation domain. He has been evaluating and providing opinions in UK, India, and Germany, India tax duties. He handles merger strategies and restructuring for overseas companies.
I think we are facing some challenges. Mr. Marwa, if you could unmute yourself, please. I think it got muted.
Right. Private equity valuations and asset management. He's worked on multiple complex transactions across sectors like real estate, IT, logistics, hospitality, healthcare, manufacturing, telecom, aviation, etc. We have welcome Alok. Alok has 18 years of experience in internal audit and statutory audit. He has had exposure of audits of various companies across all segments. Last but not the least, I would like to introduce our host, Raghu Varma. Raghu is the CEO of RNM India and is leading the firm. His expertise is on advising and structuring businesses abroad on behalf of Indian corporate clients, entry strategy for foreign clients to set up businesses in India, transfer pricing, and overseas taxation matters. Now, I would like to hand over to Raghu to moderate the ensuing session. I'm sure that you will find the panel discussions enlightening and thought-provoking. Thank you and welcome to you all. Please, Raghu, take over.
Thank you for that, Mr. Marwa. And apologies in case there was some echo earlier, in case you heard any echo. We constant drive to handle technology glitches at the last minute. And I would like to begin by wishing all of you a very, very warm Christmas and a new year. Ho, ho, ho. As you can see with the hat on, we're spreading the joy and hoping everybody is in fine spirits and survived a tough year, and hope everybody has a great year ahead. With those words, I want to talk a little bit about how we came up with this topic and what we are doing as an accounting firm, hosting these kind of webinars. So we've done in the past how to scale a startup in the month of June, how to raise money in the month of September, how to find the right startup idea last month, and now we're doing how to identify the right jurisdiction for your startup. This, as you can see, ladies and gentlemen, is a series of how-to kind of webinars, which is trying to break things down and make it simple enough for everybody. Sort of the average Joe, right? Not make it overly technical. After all, it is a webinar. And on that note, our next webinar would be on how to pick your alternative investment in 2022, which is slated for the 21st of January 2022. And we have an exciting bunch of speakers. Definitely we've got crypto being a hot topic these days. So we're going to be talking about, crypto as well. And we've got a little bit of I'm going to put it up on the screen for everybody to see. That's going to be the list of speakers for the next event in January. So watch out for that. And I hope to have everybody joining us for that on 21st of January 22. With that, I'd like to begin by quoting Richard Branson, who said that you don't learn to walk by following the rules, you learn by doing and falling over. And this session is really about that, asking all of our panelists, from their rich experience, how they learned, and to try and spread that learning with everybody. And, specifically talking about the right jurisdiction. The decision of the right jurisdiction of a startup is not so much as a tax or a legal or even a business issue or a process issue or a funding issue for that matter, or about the message that the founder is sending out to the world, right? It's a lot more than that. It's maybe a combination of all of them. In the SaaS world, especially, it is a common myth that the founder has to move to the United States to grow and expand. Today, we're going to hear from a panel of eminent speakers coming from different backgrounds, their views on how you can cater to the world from India. Some of the key criteria for evaluating the jurisdiction from a tax legal perspective may be the business safety of the jurisdiction, the ease of business reporting, the repatriation tax involved, the taxation of controlled financial companies. But we leave it to the other speakers to share on some of these more technical matters. Today, I'd like to give the example of, the founder of CleverTap, Mr. Anand Jain, a funded startup who's gone on record to say that moving to the US to be close to the customer may not make sense in a digital world where physical meetings are declining. Taking learnings from market is much more important, is what he said. since the strategy that takes a startup from 0 to 45 million is not the same that it takes it to the next level. We also have Sridhar Vembu, the founder of Zoho Corporation, a multi-billion-dollar corporation, who decided in 2019 to move to his native village called Mathalaparani, and has since championed the cause of small towns, which provide better work-life balance and avoid mental health challenges rampant in the big city life. Delaware and Singapore have traditionally been the jurisdictions of choice, with now Dubai gaining much importance. But in the increasingly transparent tax world, some of these jurisdictions are becoming untenable. And for a lot of startups, India continues to attract and retain startup talent and startup dollars. Issues like round tripping, OEM, CRS, automatic exchange of information, and global minimum tax is changing the old goalposts. It is expected that in the Indian Union budget of 2022, global anti-base erosion or GLOBE rules are likely to be introduced in the domestic legislation. Flipping by startups to change their Indian headquarters status to a global headquarters status through share swap mechanism is often frowned upon by the regulator as a tax avoidance tool. Many Indian startup unicorns have in the past done a flip, and still other leading overseas investors were alleged to have pushed the founders to flip as a condition precedent to their investment. The controversy around flipping stems from various facets, namely privacy of the Indian consumers, since a lot of these startups are in the D2C sector, loss of tax revenue for India, brain drain since most of the IP and talent got created in India. To address some of these issues, the vibrant IPO market in India, where loss-making startups are getting SEBI approvals and market validation, and by getting subscribed multiple times, is encouraging founders to reconsider the need for flipping. Draft rules to liberalize the regulatory framework in the overseas direct investment ODI space was published by RBI in August 2021 for feedback, but has yet to be formalized and notified. Such relaxation will also assist in ease of doing business in India, which is what foreign investors are looking at the end. India, as the Huron Research Institute has published, has 51 unicorns, up by 25 in 2021. Out of the 86 gazelles and cheetahs, who are the next unicorns in the next 2 to 4 years, there are only 8 which have headquarters outside India, and that also in US and Singapore, as I mentioned earlier, which are the top destinations. India today is the world's 3rd largest startup ecosystem after the United States and China, with over 60,000 startups. DPIIT is celebrating 16 January 2022 as an innovation week as part of the Startup India initiative. We hope that after San Francisco Bay Area, Shenzhen in India, in China, and Bangalore in India, the biggest magnets for tech startups continues to grow in this digital world going forward. And to end, I would like to quote the Bhagavad Gita, which had said that many prefer to let others shape their point of view. This is ignorance born of inertia, whereas a few choose to see the world only from their own point of view. This is control born of fear. When you have the ability to see the world from others' point of view, that is wisdom born of empathy. So we need a lot of empathy. And with those words, I'm going to request Neil Kothari, the founder of Aizutu, to give his thoughts on this topic today of jurisdiction. And we all know that you are a bootstrap founder for an amazing SaaS company, which is growing exceedingly rapidly. And we wait to hear from you about your thoughts on this. Over to you, Neil.
Thanks, Raghu. First of all, thanks for having me here. Extremely interesting topic. We've, in 4 or 5 years of our existence, we've struggled for the longest time. We kept on debating what jurisdiction, where should the headquarters be, how should we manage foreign entities, etc. So extremely important topic. At Izuto, we are an India headquartered company with a subsidiary in US, but we did not start like that. We were not, there was not enough guidance when we opened our US company, and we ended up having two independent companies, one in India and one in US. But later on, we realized the issue with the compliances and various other things that came into play with the entire majority of the organization and the product being getting created in India. I would like to touch upon some of the things, some of the reasons why founders are choosing US or Singapore as a jurisdiction. The first and foremost factor for an organization while choosing a jurisdiction is the impact it would have on its business. Would it enable acquisition of more clients? Would it allow for better servicing? Or would it allow for business to grow faster? US is extremely interesting for any technology or a SaaS business. US is the biggest consumer of software in the world. And any technology business does expect, or SaaS business does expect, that a large part of their future revenues are going to come from US. So having a US company just makes a lot of sense. The second reason, which is also extremely important, is the subscription billing. US allows for recurring charge, whereas India doesn't allow, or the recent regulations of RBI just made it extremely difficult for a recurring charge on credit cards. And for a SaaS business, that is extremely important, right? So that's one of the first reason why a lot of SaaS companies, the year they start, they open up a US subsidiary. Next factor for a startup is the comfort of the investors themselves, or their ability to attract new investors. US and Singapore are the preferred jurisdictions for investors because of various reasons. But I think the most important is the ease of investing and the eventual exit. The other important factor, which Dubai has been able to really build on, is the availability of local talent and hiring options. Having a company in a particular jurisdiction means that you can attract local talent and open up huge pool of people that can be hired. At Izuto, we've just opened up our subsidiary in Dubai, and we're already hiring local Arabic-speaking sales and business development executives because we want to serve the local customers. And it is almost impossible. While I do agree that it is that a lot of businesses can be served sitting over here in India, but sales for a local language issue, especially in the MENA region, you do need local sales on the ground who could speak that language and understand those businesses, right? Local tax laws and regulations, ease of doing business, these are usually the make or break decisions. They are not the cause of creating a company in certain jurisdiction, but if the local tax laws are not favorable, then people usually skip those countries. So yeah, these are from my side. These were the factors we looked on before we started the US company, and then eventually the Dubai subsidiary as well.
Thank you so much for that, Neil. And you know, you very correctly highlighted the need for the continuous subscription billing aspect and some of the challenges that are being faced on the credit card front. You know, is a real issue. I think every day in the papers we read about that you know, almost 40% of e-commerce business may be at stake if the RBI doesn't reconsider.
Right.
So that's a real challenge for a lot of big players out there. I mean, I'm sure you know, the government will heed the request of you know, some of these large e-commerce companies to come up with a solution. But yeah, I totally agree that some of these challenges are very real.
Right. And US just seems to be very friendly. And now that there are so many Indian SaaS businesses who have who are either US headquartered or have a US subsidiary, there's just within the ecosystem, it has just become so much easier because there is so much of information available. It has become so much easier to open up a US company. So it just becomes a very natural thing for any SaaS founder to open up a US business. I mean, what is not natural is that a SaaS business not having a US business.
Just on this last point, before we move on, I'm sure you've been approached by various funds and other companies. In your experience, have you found that from an investment point of view, the investors give you a better multiple or a higher multiple if you are US HQ as compared to India HQ? Is that something that you have come across, or maybe some of your colleagues on your cohort may have experienced?
Absolutely. US investors prefer a US headquartered company. It's simple. There is a huge bunch of US investors. They would not invest in a India headquartered company. It is changing, but definitely US investors prefer a US company. On multiple, it's not easy to qualify that, because different businesses have different multiple for various other reasons as well. So I would refrain from calling it a multiple issue, but definitely US investors would prefer a US headquartered company.
Yes,
and India being the development center.
That really, I think we all, being in the Indian ecosystem, need to try and improve the ease of doing business, and try and help the investors invest in in more Indian companies. I think that's the learning everybody has to take, that we have to, do the right thing first ourselves. I think
Absolutely.
each of us as corporate citizens of corporate India have that responsibility to kind of be disciplined and follow the system and the rules. We all kind of experience that when we go abroad, that the system works over there. In India, it doesn't seem to work, or the wrong system works in India. But I think somewhere it's a shared responsibility that we all have on that account.
Absolutely.
Yeah, great. Thank you so much, Neil, for that. With that, I'm going to request our next speaker for the day, Sumit Singh, to share his thoughts on the taxation issues. I mean, we just heard there are lots of potential tax issues around having a foreign HQ company. So I'm sure, Sumitji, you will have a lot to share with us all on that. So over to you, Sumitji, on that point.
Thanks. Thanks, Raghuji. So if we talk about the tax issues, so first of all, one may consider that if there is an Indian company that may be investing outside India or shifting their HQs from India to overseas jurisdiction, could be US or Singapore, or maybe private equity or any other investor, he may be putting money in the Indian startup. So on the both side, the jurisdiction issue may come into picture. But as Raghuji said earlier, that on account of shifting of headquarter bases from India to other jurisdiction, Indian tax authority has suffered the revenue or the tax losses in that kind of a planning. However, Indian tax authority has been wise enough to bring necessary amendments or modification in the Indian tax law to Indian tax law to cover up the leakage of the tax revenue which could have happened. And those amendments or these changes or the amendments in the tax law is just taking the leaves from the overseas jurisdictions laws, and one of them has been the place of effective management. So basically what happens that if an Indian company is having an investment in foreign jurisdiction, and then that foreign entity is earning at foreign jurisdiction level and they are paying taxes at the foreign level. However, all the brains and minds of that foreign company or the way the foreign company has to conduct are lying at India level. So in that particular kind of situation, it is typically termed that foreign company is having place of effective management in India. And effectively that foreign company become Indian resident if it falls within those rules and conditions specified for considering any entity having a place of effective management in India. So for making an entity place of having management in India, there is a specific definition for it. And for ease of reference, I'll be referring it as a POM. So it talks about that where the place of POM shall be in a jurisdiction where the key management and commercial decisions in relation to an entity as a whole in substance are taken. So, and subsequent, it means that where the board of directors are actually sitting, who is and at what place the decisions are being taken in relation to commercial activities or in relation to important or material business decisions like acquisition of an entity or setting up a business in new location or undertaking significant marketing activity, and from which place this decision has been taken has been the determining criteria for place of effective management. So, and in that case, if that foreign company is on account of fitting into these criteria, that foreign company becomes Indian resident, and then all Indian tax laws become applicable on that foreign company, and that's the way Indian tax authority has attempted to curb the loss of tax revenue on account of flipping to the overseas HQs. So one of the criteria for POAM has been to first to identify what is the level of active business being undertaken, and for determining active business being undertaken, what is the percentage of the revenue in terms of active business and the passive business, which is 50%, not more than 50% of the passive income should forming part of total income. However, this POAM rules has not been made applicable for any Indian company which is having a turnover of 50 crore or less than that. So they are out of that POAM issues. And now coming to the situation where a foreign company end up having a place of effective management in India, then what will be the tax rate of that foreign company? Because it becomes a resident at India. However, when this initially in 2016, these rules were introduced, these were the main issues. So owing to that, this rule was deferred up till 17, and certain notifications were introduced, and a section has not now been introduced under the Act. It categorically says that even if you are resident, but your tax rate shall be like a foreign company, which will be 40% in that case also. Second issue is what will be the scenario of a withholding tax. Assuming Indian resident is making some payment to that foreign company, which has now, owing to POAM rule, become an Indian resident. So what will be the withholding tax issues? Whether he will be withholding as a resident or whether he will be withholding as a non-resident. So law has clarified that in that case, he will be withholding as a non-resident. And then comes the maintenance of the books of accounts or preparation of the accounts once that foreign company becomes an Indian resident. In that case, they have provided that suppose in financial year 17-18, any foreign company becomes an Indian resident, and that has been decided on 1st January of 2018, then they will be required to maintain the financial for the interim period, like from January to 31st March 2018, as the case may be. And once these financials are prepared and the taxable and the income earned in foreign jurisdiction becomes taxed in India, which is 40% as discussed earlier, and assuming that entity is having some carry forward losses also, and business losses or carry forward losses, depreciation losses, or they want to claim depreciation also against their taxable profit. So there are certain provision to that effect, that whatever assets that were lying in foreign jurisdiction will be deemed as lying in India, and the year from which that foreign company becomes an Indian resident, from that year onwards, you will start computing the business loss and will start computing the depreciation quantum also for the purpose of setting it off against their income.
Sweet sir, thank you so much. I think it all sounds exceedingly complicated. For a layman, I would say section 115JH of the income tax poem, what you were discussing, sounds exceedingly complicated. And like I said, I would urge everybody to seek their tax advice specific to the facts of their case. And not solely rely upon the webinar to pick up information. I think, Sweet sir, you've kind of given the right flavor, right? That it is exceedingly complicated to kind of decipher, and the regulatory framework is obviously becoming more and more complicated as we go on. Although it's a new legislation, like you mentioned, I think there are very few case laws, and interpretations of these complicated laws will continue to emerge. and continue to, confound tax lawyers for a long time going forward. So thank you so much for that. With that, I'm going to request our next speaker, who is Alok, who is going to help us understand a little bit more of the process side of this challenge of, maybe looking at an overseas HQ or looking at US, as Neil was talking about. From a practical business point of view, there continue to be challenges in ease of doing business. So if the founder is actually going to go abroad, how does the process work? And how does the systems and controls work? With that, I'm going to hand over to Alok for your thoughts on that.
Thank you, Raghuji, for giving me the opportunity to speak. Good afternoon, everyone. I would like to start my conversation with the ease of doing business, which was talked about by the earlier speaker as a key parameter in choosing the jurisdiction. The ease of doing business comes from being in overall control and reduction of risk or surprises which might derail the startup. A key component of this is ensuring that the systems and controls in a rapidly scaling organization are not only put in place by the founders, but are operating effectively. Secondly, if someone thinks of starting a business in a home country and then decides to take the senior management or the HO outside the home country, then it is even more challenging to monitor the control systems. In my deliberation, I'll be talking about the standard operating procedures and about their importance for the management. Now, why there is a need for an SOP for the management? The answer to this question is the SOPs are required because the SOPs will ensure that an organization has a structured quality system and processes in place. And secondly, the SOPs are like the guiding light. The SOPs help an organization to not only evaluate more than what you are doing now, but it also helps you decide how to move forward. Now, what actually the SOPs will do, an SOP is a useful business tool. It communicates that the correct way of carrying out an activity within the organization. Further, an SOP ensures number one, consistency in the processes being followed, which is the most important. So when we say that the more consistent the process is, there would be lesser chances of having quality problems in the organization. Number two is reduction of errors. So as long as each individual within the organization performs the task as it is written, there is a greater chance of reducing the errors. I hope to this everybody agrees that there will be lesser chances of errors. Then the third thing is it establishes a clear accountability as to who is responsible for a particular activity to be done. And lastly, it forms basis for a financial delegation of authority. So if I can take an example of MEIS refund. So MEIS refund is basically a refund in case of an export for export of goods out of India. So in case of one of our clients who is stringently following the SOPs, so what they do is on a monthly basis, their team prepares a refund statement and submits the same to their consultant within the timelines specified in the SOP. And accordingly, the consultant files the application for MEIS refund before the statutory due date, and the company gets the refund in time. So now it is very important to note that the management of any organization cannot practically go into the depth of the business operations to check whether they are being properly conducted or not. So, however, if the management has put in place the standard operating procedures, then the management can be reasonably assured about the uniformity in the processes being followed in the organization. So with this explanation, I believe it is pretty much clear that what SOPs are and how they are useful for any organization or a management, be it a management which sits in the home country or a management which sits outside the home country. Now, the second most important aspect which I would like to talk about is the management information systems, which is commonly referred as the MIS. An MIS can be any form of report, which gives a crisp, precise, and relevant information to the management. Now, the best part of an MIS can be that it can be modified as per the requirements of the management to make sure that the management is getting the desired information in the desired format. A very common example of an MIS could be the monthly profit and loss statement or the monthly actual versus budget variance analysis. This MIS gives the information about the top line, the bottom line, the expenses, and the variance in the actual and the budgeted figures, which itself is a triggering event for the management to take corrective action wherever it is required. I can take another example of the MIS that could be the monthly cash and the fund flow statements, which will give the management a fair idea about the funds available for utilization, which will ensure that none of the checks issued by the company will going to bounce in future. So in conclusion, I would like to summarize that if an organization wants to have control over its business and its operations, be it a startup or an existing business, it needs to have in place, number one, the SOPs, number two, the MIS, and number three is the internal controls, which are inbuilt in the SOPs only. And their presence can be ensured by a process of self-introspection, either by an in-house internal audit team or by an external internal audit team. With this, I would like to conclude. Thank you.
Thank you so much, Alokji. I think that was very crisp and precise. I think more than, we're talking about startups and startups scaling up so fast. Sometimes we forget the nitty gritty of doing the small things right, which is getting the controls in place to be able to manage that tremendous pressure that comes with the scale and with the scaling up. I mean, I'm sure each of us have experienced that in our own way, that, lack of systems can definitely kind of mark the death knell for an organization. With that, I'm going to request our next speaker, Mr. Varun Varma, to give his thoughts about, from a funding point of view and a country risk point of view, how the investor community looks at India versus the world, and how we can try and help the audience here to understand some of those facets to improve their saleability or their journey in raising funds. Over to you, Varun.
Thank you, Raghuji. First of all, I would like to welcome all my brothers and sisters attending this webinar today. So friends, country risk factors play a very decisive role in the overall outcome of any investment, and it needs to be properly evaluated as it has the potential to turn an otherwise positive investment decision to a negative one. So the next obvious question is, what is country risk? Well, country risk refers to the uncertainty associated with investing in a particular country, and more specifically, the degree to which that uncertainty could lead to losses for the investor. This uncertainty can come from any number of factors. So the political stability, strong governance, strong country financials, credit rating of the country, forex, the levels of forex reserve, low and manageable amount of country debt, growing GDP and its diversification, absence of international threat, be it a military threat or otherwise, and strength of the defense forces to handle any sort of those threats, etc., are some of the key factors which needs a very careful evaluation to decide the country's factor, which needs to be built into the cost of capital to evaluate international investment. In general, countries can be classified into three levels based on their level of development. So these three categories are: the number one are the developed nations, the second one is the emerging nations, and the third one are the frontier nations. So developed market consists of the largest and most industrialized economy. Their economic systems are very well developed. They are politically stable, and the rule of law is also very well entrenched. Developed market are usually considered the safest, I would say, investment destination, but the economic growth rate often tail those of countries in an earlier development stage. US, Japan, Australia, France are like some of the example of developed nations. On the other side, emerging markets experience rapid industrialization and often demonstrate extremely high level of economic growth. This strong economic growth can, sometimes translate into investment returns, which are far superior to those available in the developed market. However, investing in emerging market is also riskier in comparison to the developed market. This is more of often more political uncertainty in emerging market, and their economies may be more prone to booms and busts. Some of the example of emerging market are countries like India, China, Brazil. Frontier markets represent the next wave of investment destination. These markets are generally either smaller than the traditional emerging market, or are found in countries those place restriction on ability of foreigners to invest in that country. Although frontier markets can be exceptionally risky and often suffer from very low level of liquidity, however, they also offer the potential for above average return over time. And frontier markets are also not very well correlated with the developed and emerging nations. So that also offers a significant diversification benefit for the large investor pool of funds. And some of the example of
Varunji, if I could interrupt.
yeah.
So
Yeah.
is India a frontier nation, emerging nation, and where
Yeah.
would you, I mean, from a investment allocation pool, where would you, which jurisdiction would you choose, or you allocate a little bit in every pie, to have a balanced portfolio? How would you advise?
Right. So India of 70s and 80s, I would call it that time phase of India as a frontier economy. Post 91, it has entered into the phase of an emerging economy. And over the next decade, India is expected to be, a developed nation. After the decade, it is highly expected that India will be amongst the top 4, nation across the globe. So currently, it is into the later stage of the emerging nation.
I think Santa Claus has come early this year, so we are all expecting a bountiful harvest, at least in the next decade. Let's all, keep our fingers crossed and hope for the best. Thank you so much, Varun, for that optimistic note. And with that, I'm going to request Mr. Sandeep Vora, the director at Roseview Investment, which is a family office, single family office. Sandeep, as we all know, is based out of Dubai and brings years of experience of not only the foreign markets, but also technology and technology investing. So let's begin with you, Sandeep. What do you think, in terms of finding the right jurisdiction? How important is it? Or is it that, it's the same grind and it's the same work that we have to do irrespective of the jurisdiction, and there's a lot of luck, there's a lot of so many other magic potion that goes into it, maybe some Santa Claus gifts that go into making a unicorn. So over to you, Sandeep.
Now I understand why you kept me at the last, Raghu. I think you first wanted to make me listen to all of them. If I were a startup guy listening to all of them, I said, never in hell am I going to set this company up. Because, you got two kids, or look at what Microsoft's got set up. They got set up in a garage. They were able to set up a company. They were able to take it up from there. So I think when you're looking at I look at it from two different points. One is from an investor standpoint, and one is from a startup standpoint. Neil very effectively pointed out certain, the big things. But the fact that Neil is Indian, based in India, he has a comfort factor, whether he's based in Pune or based in Delhi. That's the first comfort factor. Is he able to set up a company without too much of overhead costs? So he's got an idea. He needs to set up the licensing and the regulatory framework needs to be easy, and the cost of setup has to be absolutely bare minimum. I think the moment that he gets past that is when the whole thing starts, compliance, everything else, the entire framework. He doesn't care. He doesn't understand. I don't understand still. I mean, you and Mr. Marwa understand it from so many years of experience, but we don't. So the first thing is going to be, what is the cost of setting up a company? And what is the recurring annual cost till the time he starts to make a revenue? Taxation, once you have revenue, then you'll have the taxation come into play. So that to me is the fundamental aspect. How the laws work around it, what's the talent pool that you're able to attract. He's going to sit in Delhi or Gurgaon, or why Bangalore? Because Bangalore has got 18 engineering colleges. It's got all of these medical colleges. You've got a great outflow of young talent comes in. People want to live there. It's a great city. So, and you're able to attract a talent pool there. So that's why they set that up. Hyderabad started to look at it from that standpoint, and because they also had the same thing, they had a lot of engineering colleges, they had a lot of technical institutes. So they said, why can't we do it? And in the initial days, Hyderabad beat Bangalore for it. The US again becomes the same thing. Once from an Indian standpoint, the lucrativeness of the US is because of how it started from the 80s. A lot of talent went there, set up there. There's a lot of familiarization. Neil must have a few friends there, also people he worked with. It suddenly becomes a very familiar market. So India becomes very familiar, and the US becomes very familiar, and the laws in the US, I think, are more favorable towards a startup. Delaware company, as you said, we can sit in Delhi, Dubai, anywhere, set up a Delaware company. You look at the top Forbes 15 companies, they're all probably set up as Delaware entities. Why? Because you're able to do that. So I think that's very important. The ecosystem environment, as we spoke about, the regulatory form, and also the enforcements of rules and regulation. One is having rules and regulation, but the other aspect is being able to enforce. So once I do that, and if I'm being cheated, I know that the rule of the land will come and support me. There is somebody who will enforce that law for me. And I think that's something very important. So that's where I think the US becomes, they say, okay, everybody has the opportunity of doing the right thing, and has the opportunity of being treated in the right manner. And that there's going to be no monkey business. Of course, there is at different levels. I'm not saying that everybody is there, but I think that impression and that entire society and the value system that brings about. So those, I think, are the most, from a startup setup environment, that I think makes the most sense. Once you cross a threshold, once you're into your revenues of a couple of million, you're valued at 10, 15, 20 million, then comes everybody to start to structure your business. I think, and that's where, again, you will always feel comfortable. Neil will feel comfortable with you, Raghu, because he's known you, you understand the laws here, you understand the laws there, and then you'll be able to put that entire structure. But the startup will need a maverick. He needs to be, as you rightly said, the Richard Bransons of the world, they create, and then there'll be somebody else who will just put the structure around it and say, okay, where to pay a tax, where not to pay a tax. So I think that's according to me, from a startup standpoint, very important. Whether it's Dubai, whether it's the US, whether it's Europe, UK is doing fantastic these days, for helping these guys set up. From an investor standpoint, I think what is of prime importance is the deployment of funds. I mean, you and I work very closely. The ability to deploy funds quickly into a startup of our choice, which we think is important, is very important. So, the first question we ask is, where is the entity based? If it is in a highly regulated market where, it takes you forever to deploy the funds, and then, you're not able to get your profits out, you always look at, thank you very much, maybe we'll not. But do you have a BVI entity that we can invest in? We've gone through this. So I think that regulatory framework, from the other side, the ease of how an investor is able to invest, makes a very important part for it. Incentives for investments. I mean, there are lots of countries which say, okay, come in, invest, and you invest into our startups, we'll incentivize you from a tax standpoint, we'll incentivize. So that becomes very important for somebody like us. And then any clever or serial entrepreneur or a serial startup entrepreneur will always look at these aspects to say, okay, why don't I go and invest? Why don't I go and set a startup into a headquartered company, into an entity, because I'll be able to attract the investments easily. People are fine. They're going to be able to put in money, take out money, and then I can have my outsourced arrangements working wherever there are. So that's what I think, are primary important aspects. What Sumit mentioned was absolutely right. What Alok mentioned, what Varun mentioned, they're absolute valid points, but they go into a maturity of a society. Once you go through a 20-25 years of the entire infrastructure framework, because when you get to the next stage for your company, then these frameworks are very important, and having somebody to understand them and then be able to say how your company is going to steer. Because you also now hear a lot of things about re-domiciliation of companies. So people move their companies into, and that comes in because they understand that, okay, now my entity needs to be in a very different framework, very different law jurisdiction, which is going to do that. So I think those are very important aspects for somebody to understand, and be able to see which stage the startup is. How do you really define a startup? 0 to 3, 0 to 5, or 0 to 10. A lot of people want to keep calling themselves startups because they get much better traction. So this is really how I think about it from a very rational standpoint, and how things probably should be looked at from a startup entrepreneur.
Absolutely, Sandeep. I think you brought out some very key points today, and I'll just quickly recap. What you said is that as a startup who could be compared to a young child who's just growing about, just let him do his thing, let him play as much as he wants in the playground and create as much masti without too many rules. As he becomes an adolescent or an adult or a mature business, that is when you can bring in the tougher laws, whether it is the systems and the processes, or the stronger controls, whether it's the more severe tax systems, whether it is a question about which kind of country risk are you pertaining to. You're saying as a young startup, just let them go wild and free. So that is, I mean, there's a case to be had for that, no doubt. But on that topic, Neil, maybe you have some thoughts. I'm going to invite you to jump in and maybe ask some questions and share your thoughts on what Sandeep just said. Over to you, Neil.
Sandeep, I had a point, and it slightly differs from what you said, that when I believe that jurisdiction decision is extremely important right in the beginning. And we as Izuto have suffered by making some rash calls right in the beginning, where we opened up a US company without really understanding how where should the parent company be, where should the subsidiary be, etc. And so while it's important that a startup goes out there and it's like a child and you just allow them to play and grow up, but some of these decisions, if not done well right in the beginning, the compliances pile up. And once they pile up, it takes years of, and you need people like Raghu then to, and sometimes it takes really years to really to get over with the backlogs of compliances.
This is exactly my case in point. You based in India, somebody told you to set up a US company, you went in and did. But if your framework was fine here, you're based here, go do your thing. And on hindsight, post-mortem, yes, of course, it should have been, it could have been anywhere else.
Right.
But I'm saying, yeah, you could have just, you should have worried about, focused about. I know what you're saying.
Right.
But there is always a mix and match. If you engage Raghu in the beginning, and Raghu with all his wisdom to understand all the entire thing, would have said, "Nahi, ye mat karna yaar. You know, don't do this, don't sell this, don't do it here."
Right.
And you're going to say, "Wait, what do I do then?"
Yeah.
You know, but he's also right. so there is always,
yeah, there's a mix
I
and match,
understand
and
what
there
you're
is
saying.
the balance. Yeah.
Yeah.
Yeah, but from Izuto's perspective, a $50 mistake actually eventually costed us some $30,000 to
But
correct.
that's where I think if you were based in Delhi to set up a US company, you should have had the comfort that you could set that exact thing up in Delhi or Pune or in India, and then go with it and not worry about a US thing.
Right.
And that's where.
Just to step in here, Sandeepji, I think you've raised a really wonderful point.
Yes.
And both of you have, hit the nail on the head about the balance aspect. But first, to kind of, Sandeep, what you were mentioning about it being, because that's the Dubai way of doing things. It's a very capitalistic, open market where they're not really asking you much questions. The regulatory hang up of what, Neil is referring to, that, it'll pile up. In a Dubai kind of jurisdiction or a UAE kind of jurisdiction, that really doesn't happen, right? There's no pile up that would happen. Nobody would come after you after 3 years and say, "Oh, hang on, 3 years back you did this, and what, the ramifications of that are going to be X, Y, Z, and, so on and so forth." But yes, in India, those things do pile up because we are obviously inherited the laws from the British, and we are very document oriented in our approach. I can see the smile on your face, as against the startup, Wild West is what, Dubai is trying to tell the world, that we are the Wild West. And that's why, where this is the Dubai Expo. So one more thing that I wanted to speak about, and what you were kind of alluding to earlier was the grants, right? Some of these, especially European and other countries, give a lot of grants to startups, especially who are involved in high-tech sectors or in, cutting edge technology sectors. And that is maybe another aspect to the whole decision making of the jurisdiction that we kind of missed out. Would you like to share your thoughts on that, Sandeep, as well as Neil?
Neil, you want to go first?
We at Izuto haven't been part of any of such decisions, honestly.
Okay.
But, yeah. So if Sandeep, if you can take this.
So you know what, European Union, they encourage these startups, and countries. So they've definitely got two tiers: the advanced West and the coming up Central Asia, Central Europe, and the Eastern European places. And to encourage, they always say, put in a case study, put in a tech startup, and then we will give you a 20,000 euro grant for buying this stuff. So I know a guy, a young guy, who wanted to set up a tech onto real estate surveying, and he was developing his software, but there was almost a 25,000-30,000 euro investment on the equipment that he wanted to buy. So he put in a case and he submitted it to the EU, and they said, okay, you know what, we'll give you the money, go buy your stuff, send us the invoice, and we'll give you. So they help entities do that, and that helps a lot of startups. Then they will come about and say, okay, this is a case, we'll give you the cost of 5 employees. So if somebody's got an idea and they're able to deliver it, but they don't have the startup cost, that there are grants available. UK's got its program, and we're looking at an very exciting startup in Turkey, where they are moving from Ankara to London because the UK government has said, listen, we like your idea, we want you to set it up. We will give you a 75,000 or 100,000 pound investment into it. But the only criteria is that you move your headquarters to London. So what they're doing is they're attracting talent pool, they're attracting startups, they're going to give them the framework, And that's how this is another aspect of doing. So these are governments. These are not accelerator programs where you subscribe to get that education, but there are absolutely legal grants for developing this infrastructure and developing this, from Croatia right up to Netherlands or Finland. I mean, Finland today, most people don't realize is the #1 education tech country in the world. And it's right after Switzerland on medical technology being developed, and the government is taking huge initiatives to saying, your kids, you want this, your cost of license is 200 euros, you work out of your home, and if you want to buy computers, go buy it, put in a case, we'll pay for it. You want to buy, so get through that initial threshold.
Yeah, wonderful.
Then start.
So I think, Sandeep, what you're saying is absolutely right. I think as against some of the government grants and the government initiatives, Neil, maybe you'd like to share your experience at being part of a private cohort of an accelerator or an incubator, because in India, I think what happens is whatever governments are doing outside India, the private sector kind of chips in and it kind of gives that support, because obviously startups still need that support. It's not coming from the government, the private guys do it. So what has been your experience in being in such a accelerator or an incubator program? And, do you think that it has been beneficial? Do you recommend it to other startup founders to go through that? What would you like to share some thoughts?
Right. So accelerators, we've been part of an accelerator called Upekha. It's a SaaS accelerator for Indian product startups. I think the biggest thing that accelerators bring to the table is the peer group of similar entrepreneurs who are going through similar challenges, who have very similar challenges, whether it's on the business side or on the finance side or on the compliance side. And you end up learning a lot from the entire peer group. And as part of the accelerator, you also end up talking to a lot of business leaders who have already who had these challenges 5 years back, and now they've come to a position where they've seen all of that and they have new set of challenges. So accelerators may not necessarily bring the capital, but having access to this peer group where you are in the same boat or you're facing same challenges helps a lot. And I would strongly recommend any of the startups in India to definitely be part of an accelerator. The other thing that accelerator does is it's like their investment. They want you to be successful, right? So they're deeply involved in the journey till the time you get to a level where you can be on your own, or you have access to a larger set of people who are helping you along the way. Otherwise, accelerators hold your hand and they take you to certain levels.
Absolutely. Thank you so much. Any other questions that any of the other panelists may have? Sumitji, Alok, any other questions from this august panel before we let them off? I know it's 4 o'clock, so we had promised to be on Swiss timing, but I thought I'll just ask everybody in case they have any other questions. Okay. It doesn't seem to be so. So thank you so much on that happy note. Ho, 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 and happy Christmas and happy New Year for the rest of the year to everybody. And God bless.
Thanks a lot.
Thank you, everyone.
Thank you, everyone.
Thank you. Bye-bye. Thank you, everybody. Thanks.